you. Today we will discuss about the journal entry or the primary accounting record process. Primarily, how we can the entry or transaction primarily record in a accounting book. The primary accounting book is called a journal book. Okay. The primarily recording of the accounts is called the journal book. So ultimately, journal book is the primary book of account. Those account you are primarily maintained is called a journal book. In a journal book, which account or treatment or record is called journal entries. There are two very important items. Number one, journal book and journal entries. Journal book journal entry গুলো treatment দেওয়া হয় আর journal book means primarily book of accounting. At first step of accounting book is called journal book. Journal entries, which entries are recorded in journal book is called journal entry. Okay, then what is the journal? Journal is a recording process at primarily at chronological order with short explanation. That's mean জাবেদা হলো জার্নালের বাংলা হলো জাবেদা। জাবেদা হলো এমন একটি আইটেম যেখানে লেনদেনগুলি সংক্ষিপ্ত আকারে তারিখের ক্রম অনুসারে লিপিবদ্ধ করা হয় অস্থায়ীভাবে, তাকে জার্নাল বলা হয়। Look at the slide. Here are simply define about the journal. It is like an accounting diary. That's mean when you primarily something try to record or writing, you just try to write on your diary anything. But in same way, in accounting item, accounting transaction, primarily a writing system, primary writing chronological order is called a journal. Okay, and this journal are write in this book. This book is called journal book. Okay, and in a journal must be chronological order. তারিখের কর্ম অনুসারে লেনদেনগুলো লিপিবদ্ধ করার নামই হলো জার্নাল। Purpose of journal. Three purpose of journal: provide a continuous record. Your record must be continuous of accounting entries as they occur. Organize the transaction, ensure that each entry transaction organize and ensure each entry balance, অর্থাৎ ট্রানজাকশন গুলোকে সংঘবদ্ধ করা হয় বা সংগ্রহ করা হয়, তারপরে নিশ্চয়তা দেওয়া হয় যে সেখানে ব্যালেন্স আছে। ব্যালেন্স মিন্স রাইট হ্যান্ড সাইড left hand side equal, debit equal credit, like this balance. Okay, and final purpose of journal: provide a reference for a verifying transaction. Transaction গুলো ভেরিফাইং হলে তাকে একটা রেফারেন্স দেওয়া হয়। এই রেফারেন্স দেখে বোঝা হয় যে এটা ভেরিফাই হয়েছে কি হয় নাই। এই তিনটি উদ্দেশ্যের জন্য জার্নাল করা হয়। ঠিক আছে, এখন জার্নালটা how we can prepare journal entry, just I gradually I try to develop your image. Okay, look at the diagram. Journal entries. Journal entries are right this a diagram or chart. This chart contain 5 columns. First, date. Second, description, transaction description. Third, reference. Fourth, debit, and finally credit. So in journal entry and journal chart, there are 5 columns. It is a common question. How many columns are contained by a journal? or journal entry. 5 column. Okay. Date, you know that date.
ক্লাস চলে
স্যার পোস্ট
Reference, just reference. Account number or account reference. Debit and credit and next slide, I try to details TC about how we make debit, how we make credit.
স্যার আগে হচ্ছে জাবেদাতে আমরা একটা ইয়া ছিল, সেটা হচ্ছে খতিয়ান নাম্বার, মানে জাবেদাতে একটা চক থাকতো যেটা খতিয়ান নাম্বার, ওইটা নাকি এটা?
Yes, খতিয়ান নাম্বার। আপনি কিছুক্ষণ পরে একটু পসিবল আমরা রেকর্ড করে নিয়ে আপনাদের সময় দেওয়া হবে। যেহেতু আপনারা কথা বললে রেকর্ডটা আপনাদের শুনতে বিরক্ত লাগবে। ওকে ওকে, খতিয়ান পৃষ্ঠা ফসিয়াল এফএল এলএফ আরএফ আরইএফ লেজার pista number like this reference. Anything a reference, we just highlights your transaction by a reference. Okay. Anything ABC 1 2 3 page number like this reference thus indicated to recognize the item or transaction. Now I am discuss the phaser of journal entries. First phaser, chronological order. Chronological order means date by date, order follow up date, chronological order. Double entry system means every transaction has two side, two parties. Left hand side is equal to right hand side. Debit is equal to credit. Both are same. That means double entry system. Day book. Journal entry is one kind of day book. Day by day are record here. Compound entry possible. Compound entry means when asset account, nominal account are combinedly are transit or treatment here. That means compound entry. Assistant to ledger, the posting. Transaction are post from journal to ledger. Ledger is a permanent account book and journal is temporary account book. You mind it. Ledger is permanent account book and journal is temporary account book. It is very common question. Which types of book are permanently record? Ledger. And assistant means সহকারী বই যেটাকে বলা হয়, টেম্পোরারি বই। সহকারী বই থেকে লেজারে আমরা পোস্টিং দেওয়া। ট্রানজাকশন আইডেন্টিটি, ট্রানজাকশন ট্রাই টু আইডেন্টিফাই, শনাক্তকরণ করা হয়। অরিজিনাল এন্ট্রি, জাস্ট অরিজিনাল এন্ট্রি or real entry are treatment here. Includes brief explanation, a very short explanation, the manners or nature of transaction. Okay. What is the transaction? Transaction means which event change the financial position of an organization is called transaction. Transaction and data and event are different. Event means anything. Transaction means which event change the financial position of an organization is called transaction. To mind it. Transaction, what is transaction? What is event? What is journal book? What is ledger? Mind it. Ledger book is a permanent account book. Journal is temporary account book. Very funny and short question. Okay. Now I am going to another slide. How to prepare a journal entry. To prepare a journal entry, you maintain 3 processes minimum. Number 1, recognize the account involved. Which types of account you first recognize? Then which types of account you just determine? Recognize, determine, and finally implemented relevant accounting rule. You just treatment the transaction according to accounting rules. Okay. So when you try to prepare journal entry, you must follow three process. First process, recognize. You recognize this is the transaction. If transaction, okay. If not transaction, you no need record, no need write. Okay. So at first you have to recognize this is the transaction. Secondly, you determine which types of account, nominal account, real account, personal account. Just you determine. Then finally you treatment, okay, or practical calculation or practical record your transaction. And next time try to how we can record. Try to next. This is the journal entries. Journal entries is a very short definition. Journal entries are the first step in accounting cycle. A primary book, primary step is journal. Mind it. It is used to record all business transactions. So business transaction ko record karaর ক্ষেত্রে প্রয়োজন হয়. Okay. You mind it here. Primary book, primary step, primary entry, primary record. Everything primary is called journal. Then finally, you mind it shortly. And process of journal identification, at first you identification, then analyzing transaction, then make journal entries, Now I am going to discuss a very crucial point to record a journal entries, how we can record a journal entries and rules of journal entries. In journal entries, two party, debit party and credit party. Okay, how we can record a debit and credit, very simple and short or summary. I try to highlight here. You look at debit entries, behind debit entries, increase asset, increase prepaid account, debit, and decrease liabilities and decrease equity is debit. When you try to consider as debit, you try to consider debit when increase asset, increase prepaid account, decrease liabilities, decrease equity. Equity means owner equity. Equity means capital. Okay. American, British are different name they are called. Equity, owner equity, capital. Same, but different area, different name. Okay. So when you make debit, when increase asset, you write debit. When prepaid account increase, you write debit. Again, when decrease liabilities, you write debit. Again, when equity decrease, you write debit. So when you make debit or write debit, record debit, this is the very short summary here. Next, credit. When you make or made credit, increase liabilities, you write or record credit. Increase equity, you write credit. Decrease asset, you write credit. Decrease prepaid, you write credit. Okay. When debit, when credit. Very short. I try to understood here. I think you clearly understand what I said. And debit all expense and losses. All expense and loss is debit, and all income and gain is credit. Okay. On the purpose of expense and income, all expense debit, all income credit. Okay. Increase asset, debit, increase prepaid account, debit. Decrease liabilities, debit. Decrease equity, debit. Okay. Increase liability, credit. Increase equity, credit. Decrease asset, credit. Decrease prepaid, credit. Clear? If you fail to understand this summary, you cannot understand the journal entry. You have to anyhow, hook or by crook, you try to understand this or memory this. Okay?
Yes, sir. But here this topic prepaid. You can again please, sir.
Prepaid account means you advance take a cash, but you no get any service. Say for example, you working your friend, but you give money advance, but your friend uh, activities perform next performance later, but advance paid. Okay, say for another more example, you want to doing something by a person by employee. Say for example, you building a you try to prepare a building. Okay, but you hire some employee, but you advance paid, but they work next time you. It is a prepaid.
Okay,
Okay,
sir. Understand. Okay.
okay, prepaid. So prepaid is one kind of asset. Okay, you just give money and advance, but activities or working activities next or later. Okay, prepaid. Prepaid may be expense. Prepaid may be income also. Prepaid income also called unearned revenue, and prepaid expense one kind of asset. Prepaid income one kind of liabilities. Prepaid income is another name is unearned revenue. That means okay. Next time try to learn them. Just to mind it this position. Okay, this is a very crucial. When debit increase, when liabilities increase, you mind it carefully. When liabilities decrease, when prepaid decrease, carefully mind it. When expense increase, when expense decrease, carefully mind it. Okay. When income increase, when income decrease, carefully mind it. Okay. Now I am going to next slide and more details there highlights. Three types of account. You try to write debit and credit. At first, personal account, debit receiver, credit giver, who receive debit, who give or giver credit. Example, debtor, creditor, and so on. Another done that. Real account in asset related. Real account means asset related. Which account we get benefit more than 1 year. It is a real account, asset classes or asset level. Debit, what comes in, which are comes in, which come in your factory, your organization is debit, which goes out, go out, it's credit, real account. On the basis of real account, when debit, when credit. Okay. On the basis of personal account, when debit, when credit. Okay. You carefully mind it and carefully. Nominal account, debit all losses and expense. Nominal account, all losses and all expenses debit. And credit, all income and gain credit. An example, interest, dividend, and so on. So debit and credit is another simple and easy way to recognize or to record. How we can record debit and credit. Debit, credit, when personal account, receiver debit, giver credit on the basis of personal account. On the basis of real account, what comes in debit, and what comes out it credit, real account purpose. Okay, real account is the assets types of account. Example, cash, bank balance, purchase, sales, plant and machineries, and so on. Nominal account, debit all losses and expenses, credited all income and gains in nominal account. And nominal account actually loss and income, loss, expense like this. This is the another example to determine debit and credit. Okay, and now I am going to details how we can identify debit and credit by a golden rules of accounting. Okay, this is the more clear, more clear. Before I try to two slide and two diagram, but combinedly I try to third diagram, third slide here, golden rules of accounting. Okay, you look at real account, personal account, nominal account. Real account, when real account, what comes in debit, what goes out credit, the real account. Okay, real account related with asset, real account related with asset. Real account when applicable, the rules is applicable to all asset of business. All asset of business is a real account. Example, cash, land and building, plant and machinery, furniture and fittings, trademarks, etc. This is the example of real account. When real account debit, when comes debit, when real account credit, when this goes the asset, this is a credit. Okay. Now I am trying to go in another point. Personal account. Personal account receiver, if receiver, then debit. If giver, then credit. The personal account example, the rules is applicable to the person, artificial person, and representative person. Personal account three types: normal person, artificially person, and representative person. Normal person means normal, any directly name Rohim, Karim, Tamal like this. Artificially person whose name are set by a special act or a special rules is called artificially person. Say for example, Beximco company, real estate company, RFL company, Aki's food and beverage like this. The company name which are selected on the basis of company rules and regulation. This is a artificially person. And a representative person is an indirect name. Say for example, when expense and liabilities are prepaid and outstanding are writing. Salary expense. Okay, but it before outstanding or expense, any kind of expense, but before prepaid. So outstanding related and prepaid related, any words are early writing of a base account is called a representative person. Okay. Representative person, another example, drawings and capital. Drawings means উত্তোলন, capital means মূলধন। উত্তোলন মূলধনের সাথে কোনো না কোনো ব্যক্তি জড়িত থাকে, এই ব্যক্তির নাম এখানে সরাসরি উল্লেখ থাকে না, এই জন্য এটা রিপ্রেজেন্টেটিভ। এগেন, কোনো খরচের আগে যদি বকেয়া লেখা থাকে বা অগ্রিম লেখা থাকে সেটা রিপ্রেজেন্টেটিভ। ওকে, তো now I am going to the another option, nominal account. All expense and losses debit, all income and profit credit. So nominal account is all income and all expense is nominal account. Nominal account applicable, expense, income, losses, profit in this type. And example, salary, wage, purchase, sales, commission, receipt, etc. This is the very core summary of all items, debit and credit. I think you clearly understood about this. Okay, I think no question because clearly show here, very clear and very simple and very short this diagram. I think there is no chance to complexly understand. I think easily you understand this diagram. You look at the diagram, 2 minutes, I give you time 2 minutes, because if you fail to understand here, You cannot writing, cannot identify, cannot determine debit and credit. Okay, I just give you 2 minutes to clearly understand about this. Okay, I am going to another option. Types of journal. There are 2 types of journal. At first, general journal, and second, special journal. General journal and special journal. General journal have a different category. Special journal have different category. So I try to next slide. This is the general journal. General journal, again, we can determine the 5 types: transaction entry, adjusting entries, closing entries, compound entries, reversing entries. This is the types of general journal. Adjusting entries mean matching. Closing entry means close. Compound entries means real account, nominal account, and personal account. Combined treatment. Reversing entry means opposite. Is a normal journal. You the normal journal first, then you just opposite. This is the reversing entry. Okay. This is the types of general journal. And this is the types of special journal. Special journal, another 4 types: sales journal, purchase journal, payment journals, and receipt journal. Receipt journal means all receipt you record here. Payment journal, all payment you record here. Sales journal, all kind of sales you record here. Purchase journal, all kind of purchase you record here. Okay. This is the types of special journal. How we can make the journal entries? You look at the diagram. Purchase, if you purchase debit, if you and parties name credit, you purchase from where? What person? This person name credit, like this. You try to writing like this. Okay. You just look at, see how we can prepare the journal like this. Prepare. Now I am going to adjusting journal entries. Adjusting entries and closing entries, both are record at end of the accounting period. End of accounting period means you may maintain accounting period 3 months, 6 months, or yearly. Okay, your company, it is a policy of your company. Your company which policy follow to close your accounting at the end of year, mid of year, first of year. Just depend on company policy. So closing entries and journal entries both are record at the end of year. Okay, at the end of accounting period, but there are a distinct difference. Closing entry is just entry close. Okay, and close income summary, close by income summary, and adjusting entries just matching time to time. Say for example, your organization, there are different type of transaction. Say for example, current year, previous year, and future year. This year are you match, year to year match. This is the adjusting entries, but recording end of accounting period. In same closing entry record at the end of the year, but close by income summary. You mind it, close by income summary. So for example, all kinds of revenue and gain, credit, your golden rules. Your rules, you follow the rules. They have all income and profit credit. All income and profit credit, mind it. But when you try to close, but it's opposite. When you try to close, you see revenue and gain debit. and income summary credit. That's mean you have to close but not crossing mark. You have to close by entry by entry. Okay, you mind it. Say for example, you wrong or mistake your calculation, you crossing user close, but in accounting no chance to highlights as crossing. You have to close by entry by income summary. You have to close the entry by income summary. Say for example, revenue and gain all times we know credit, but in closing entries this is a debit, just opposite, and close by income summary. Okay.
Cutting the again.
Same way, expense all expense debit, but in there all expense and loss credit, just opposite, and close by income summary. Same way, retain earning debit, but here you credit, just opposite, and close by income summary. This is the nature of closing entry. And adjusting entry is just match time to time, year to year. And next time I try to more clearly, more details about closing entry, adjusting entry. Okay. This is the general journal. Is a compound general journal. Okay. Reversing entry today not discuss. Next time try to discuss. Okay. Closing balance and opening balance. You mind it. Closing balance. Closing balance in 2017 and 2018. Closing balance. But this balance next year is opening. The opening balance for 2018 and 19. Okay, অর্থাৎ যে বছরে যেটা ক্লোজ হবে পরবর্তী বছরে এটা প্রথমে হবে। Okay, you mind it. The closing balance 2017 2018 this, and this you next year it will be opening balance like this. Okay. Journal this